Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gerdes, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
And welcome back to the Real Estate 401k Show. Your host, Ryan Gerdes, all the way down at the end, Justin Frederick in the middle, and me, the humble host, Mike Weinstein. All right,
I'm going to introduce next time, and then I'm going to.
Oh, just do it right now. Do it right now. I want to hear it.
Well, no, we have the not so humble.
Yeah, I'm the most humble guy I know.
Right.
I don't know. We never can just get into the topic.
No,
not with you guys.
Because your intros, we always have to have a comment to your intros.
Yeah.
You know.
Well, anyways, so it's been years, Ryan, that we've seen short sales, pre-foreclosures, people requesting loan modifications. And obviously it's just because so many people, were building so much equity. Even if you couldn't afford your payment at 3.25%, you could sell your house and still put money in your pocket. But now we're seeing, in the last year or two, as interest rates have gone up, people have got hefty payments. Property values over the last year and a half have dropped a little bit. And now people are having a hard time. So, Ryan, let's break it down. What's a loan modification?
Loan modification, it's actually a number of different things, and it's basically a renegotiation of your terms of the loan that you already have in place. So if you got a loan at 3.25 and you borrowed $500,000 and you were hitting some tough times and you needed a little bit of help or you missed a payment, then it makes more sense for the banks to work with you than it is to try to foreclose on you, especially when there isn't a huge gap in equity. So if you have a $500,000 loan and you were to sell your home for like $510,000, there's not like a huge gap there, right? So they're going to say, all right, if I'm going to drop $10,000 and however many man hours in foreclosing on this individual, it makes more sense for us as an institution to figure out a way to get them back on track. And so they'll sometimes take some of the interest that you owed for those past few payments, tack it on the backside. Sometimes they'll say, hey, instead of a 30-year, let's do a 40-year loan. There's a number of different creative ways that banks have worked with borrowers out there in order to help them resurrect their financial situation, because more often than not, these are temporary issues. Now, if they feel like it's a permanent issue, then they're usually not as quick to help. But we've successfully helped quite a few people navigate through the loan modification scenario. We've found that the biggest issue is pride, quite honestly. People don't want to raise their hand and say, hey, I'm having financial struggles. And I get it. No one wants to show their vulnerability to somebody that they don't know and talk about money that they don't have. I mean, it's difficult. I get it. But the worst thing that you can do is to either avoid the bank or avoid the different options that are out there. So eat a slice of humble pie and pick up the phone and get one of us on the phone so that we can help you navigate through that, and we're happy to do it.
All right, if you are struggling making your payments and you're facing a possible foreclosure and you'd like some more information about loan modifications, go ahead and text the word MOD to 623-AZ-RECON. That's MOD to 623-AZ-RECON, and we can help guide you through the process. And I think, Justin, a lot of people aren't aware of the loan modification option, and they're not calling their bank to figure out what their options are. And next thing you know, they're in the pre-foreclosure stage and then the foreclosure stage. How bad is that on credit? And why is it so important to explore your options?
It's absolutely devastating to credit. And not only is it devastating to your credit, but it's devastating to any future near future qualifications for purchasing a home. Typically, in a lot of these cases, when automated underwriting systems are looking at files, they're They're reviewing how many lates have they had in the last 12 months? How many 90-day lates have we had in the last 24 months? So it's an easy way for them to determine if they're going to give you a loan or not. And that's probably the first thing that automated system looks at on your credit. Now, I'm just going to say this. Banks are not in the business of selling homes. They don't want to sell homes. They want to have these conversations with you. Avoiding the phone calls is not the right move. Taking the phone calls, having the conversations is the right way to go. But I would start here. Start with these guys. Have these conversations. They can guide you through the process, kind of lead you to the right direction. Maybe tell you that there's other options available. But yeah, the foreclosure status is not the direction you want to go. In a lot of cases, I've seen borrowers short sell their home or sell their home without missing a payment, and that will help you dramatically on getting a home in the near future.
If you'd like to have one of those conversations, just start here, as Justin said. All you got to do is text the word MOD to 623-AZ-RECON. That's MOD to 623-AZ-RECON. Ryan, Justin had mentioned, and I want to get into short sales. For me, I look at it if you can't afford your monthly payment, there's 3 tiers. Loan mod is the best option for you. The worst option, as we already said, was foreclosure, but in that middle is short sales. And we've done a lot. We've navigated and helped a lot of investors through short sales opportunities. We've helped a lot of clients, salvage their credit and explore the option of a short sale. So kind of get into what that is, what is the benefit, and what is the process.
All right. So we already talked about the loan mod process, and it's usually requiring like missing a loan payment or something like that, and you might have just had a little bit of stroke of bad luck. But when you take it to the next level where, hey, you might have had some serious employment issues or health issues or something that's going to be a little bit more permanent, then that's when we start having to navigate those waters of, all right, what does this look like so that I'm not committing financial suicide. I'm not having to file bankruptcy. I'm not having to foreclose, doing some of those things that are really going to set you back for years and years and years. The short sale option is fantastic, and I personally, I've navigated a couple hundred of them in my tenure of this business. And the good news is that in 2008, somewhere right around there, the banks wised up and they actually started building out loss mitigation departments. Prior to that, I don't even know that those departments existed for most of them, and so the fact is that we're not going to face as many now as we did back in that 2008 to 2012 kind of window, but we are starting to see them. So what that does is essentially we are applying for a loan. It's funny. It's funny that we kind of posture it that way, but you're essentially applying for a loan, and you're showing the bank that, hey, I am not financially feasible for this loan anymore. I would like to do a workout with you so that we can get this home sold and do a lot of damage control here, because if they have to go down the route of foreclosure, it's obviously terrible for the borrower, but it's even just as big of a nuisance for the lender as well. So they're going to essentially sell the home short of what is owed on it. And then the bank is going to look at financial hardships, they're going to look at assets, they're going to look at credit, they're going to look at everything that you would look at as if you were applying for a loan. And then based on the strength or weakness of that borrower, they're going to approve it. And then you're going to sell it just like you do any traditional fashion. You're going to either put it on the MLS. Seller's going to find a buyer, right? And whatever median that they decide is best. The bank is then going to go over there and do their own little appraisal on it. They call it a BPO, or a broker's priced opinion. And they're going to say, hey, look, even though it's short of what you owe, we do see that the value is here rather than there, and we are going to approve it, or we are going to decline it, or we are going to counter it. And then based on what the buyer's not willing to do, they're going to strike a deal. Once it's closed, the difference, so if you owed $500 and you sold it for $400, then there's going to be essentially a 1099 that goes out for that $100,000 difference. It is important that you know that and that you work with your tax advisor in order to face that possible tax exposure appropriately.
All right, if you like some more options, and if you're struggling, with your payment, and there's a lot of sharks out there, and so beware. And I think one of the challenges, there's a lot of agents out there that just don't understand short sales. And so I think you got to be careful on who you work with and who you list that house with. We've done a lot of them throughout the years, definitely well versed in it, and we'd love to have that conversation with you. All you got to do is text the word MOD, M-O-D, to 623-AZ-RECON. That's MOD to 623-AZ-RECON. I think, obviously, once the house is foreclosed on, it's done. And no matter outside of that, no matter where somebody is in that process, somebody who is struggling to make their payment, wherever they're at in that process, definitely you want to pick up your phone. You definitely want to text us. But I would also say, guys, if you know you're heading down that road, you might be current on your payments today, but you know that, hey, next month, this payment is not going to get made, and probably next month it's not going to get paid. How important is it to start having those conversations ASAP and start building that strategy? Because the more time that you have to build the strategy, the more successful that strategy will be.
Yeah, and I would say with the modification portion of it too, getting on top of that, because they're going to be able to see what's coming down the line too. If you feel like you haven't missed any payments, but your income has decreased, or you've picked up a lot of debts, these are things that they're going to look at and determine if you fit right for a mod. And again, they don't want to sell your home. They want to make it work. They want to keep you in it. I've seen them do some crazy things too, where let's say you owe $400,000. I've seen them break off $100,000 of it and make it a silent second that you don't pay on, and then you just continue to pay on this $300,000 in a 40-year loan. And then if you ever sold the house, that $100,000 would need to be paid off, but it's still there as a lien. They're just not getting rid of it. But that helped out dramatically with payments. I've seen them decrease payments or interest rates. I've seen all kinds of cool things with modifications. But I've also seen the short sales go very quickly and very easily. Just got to get on top of it. You got to have those conversations, and like you guys said, you got to eat that humble pie. You got to eat some of that Mike pie. And,
look at you, funny guy.
I see what you did there. Yeah. And I think that a lot of people, aside from just the pride element, you're negotiating with a huge fund, right? So whether it's one of the big three that's over on the retail side, Bank of America, Wells Fargo, Chase, a lot of these other banks that they have these loan mod these loss mitigation departments, and these are professionals that you're negotiating with, and there's so many different moving parts of it, and the way that you got to read these approval letters can be tricky.
Yeah.
And then especially if you have an HOA, if you're behind on HOA dues, a lot of people just think that gets absorbed with the property. It doesn't. You have to negotiate that as well, because that will end up being pinned as a personal liability, and could come back and bite you in the rear end for years to come. So knowing all the different moving parts of it is essential, that you have a professional that knows the protocol and knows the system.
And I would also say to that, Ryan, is I'm now talking to investors out there who are finding out that their neighbor's house is in the foreclosure process, or their friend knows somebody who's going through that foreclosure process, and they're like, okay, I'm going to just jump on this. And there's that temptation of, well, forget the agents. I'm just going to do it myself because I've purchased a couple homes, right? Or my sister is an agent who just got her license 6 months ago, and I want her to go negotiate this for me. As an investor, it's a whole different ball game, and you walked us through one recently. Just I don't even know how you did this, bro. But it's even so. Even if you're that investor and you're sitting on that opportunity, you want to talk to somebody who knows what they're doing. We're obviously that group, and you can go ahead and text the word MOD to 623-AZ Recon.
So ultimately, when you text in, we want to help navigate you into such a position where you're holding onto the property, because everyone at this table, we really feel like the market, because chances are if you're facing something like a loan mod or something like that, it was either due to COVID or you bought at the height and maybe you put very minimal down and you might have paid $50,000 above appraised value.
Your rate's 8%.
Yeah,
I mean,
There
could happen.
There's a number of different people that this is truly affecting, and so we have a ton of different options out there that could help you stay in the home. That's what we ultimately want. But if we get to that point where it's like, hey, you're out of options, that's really what's most important when it comes down to navigating that short sale. So. Definitely reach out. We want to have that conversation, explore all the options on how you're going to.
And we want to have that conversation if you are that investor and you have that opportunity, because it's very easy to get your offer rejected and then you walk away and you don't understand timing and you don't understand that in most cases, there's a lot more room to negotiate.
And I feel like the biggest thing that we're missing is we have these listing agents who might have taken a short sale class, or they have somebody that they feel that they can trust to help them out. And 9 times out of 10, they've not done nearly the upfront work. Before I have ever marketed a short sale, I knew exactly what the bank needed out of the deal. I knew exactly what the terms and conditions were. We had it all completely, for lack of better words, underwritten prior to even marketing it. And so when buyer came along to purchase the short sale, I already knew exactly what was going to be a waste of time and what was going to be worth something looking at. And we had 100% close rate on all of those.
All right, if you're looking for more information on loan modifications, short sales, pre-foreclosures, and things like that, whether you are someone struggling to make your payment or whether you're an investor and you're sitting on an opportunity and you need some guidance, all you got to do is text the word MOD to 623-AZ Recon. That's MOD to 623-AZ Recon.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623-AZ Recon.